Hello, welcome back. This is Si Wing Yi from the Year Listed Network, and I'd like to share this short video by Realtor.com. Just came out yesterday, December 7th, 2022. In my title will be Get Ahead of the Curve. Get ahead of the curve. What do I mean by that? We need to if you are trying to move into a to an upcoming location for to buy a primary home wherever you are in the United States, or whether you are a real estate investor, you need to be ahead of the curve. This means you have to get in front of growth before the mainstream media find out about it. So I've been doing this for many years, several decades, hoping real estate investors from all the US buy in the most prudent markets, buy entry-level price single-family homes and rent it out. So to help people become a landlord, to become a real estate entrepreneur. Buy in the prudent markets where the prices are very low, so you can match the rent, whereby the rent to value ratio makes sense. So you can cash flow. You can achieve positive cash flow with 20% down payment as a real estate investor. So today, or primary, for those of you that want to buy a primary home, of course, it's very challenging right now. But due to skyrocketing rents, skyrocketing home prices during the pandemic, and the mortgage rate has increased anywhere from currently 6 to 7%. That has, that really make this the house market very challenging. But get ahead of the curve, understand what's going on. Don't follow the herd, if you will, right? I mean, avoid the herd mentality, get in front of the curve, which I have done over many years to help our home buyers and real estate investors to do that for many years and to enter the right market where the numbers make sense. So without further ado, Realtor.com just produced this article yesterday, top 10 markets for 2023. So without further ado, quickly, let me go. Now, here's the takeaway I have. I mean, the top 10 are, this is, you don't expect to hear these kind of things because for the past few years, all the mainstream media, all the YouTube channels, all the, media and all the websites, they talk about the trophy markets, the hot market, the boom to bust markets, such as California, hot and cold market, cyclical markets, such as Boise, Idaho, Nevada, Las Vegas, Nevada, and Phoenix, Arizona, and Austin, Texas. All this boom and bust market. It makes a good story, very exciting. They are what you call trophy markets. And of course, these markets have achieved massive amount of appreciation in the past few years. And now they've gone through a correction, 5, 10, even 15% price reductions in many of these markets. But what the mainstream media does not share with you is there are 400 markets in the US. There are 400 MSA, Metropolitan Statistical Areas. And, mainstream media only cover the 20 or 30 markets which is very, a lot of exciting negative headlines, doom and gloom headlines covering this kind of markets. So Realtor.com, I really like that they have pivot, and they have pivot, meaning they have done some additional research and they're going to counter a general public type of exciting news. So they have identified the top housing markets in 2023 because these markets are not trophy markets. They are not exciting. They're boring markets, as a matter of fact. But based on my more than 20 years of real estate investing personally and guiding thousands of our real estate investors to achieve positive cash flow, we take our investors quite often to this kind of market. This kind of market are blue collar, Midwest type of a stable market. They have not gone skyrocketing in prices, and they just just humming along, nothing exciting. But if you want to become a long-term primary home a buyer or real estate investor long-term, these kind of markets uh, is bread and butter. I call it bread and butter. Is try and true. Many investors over the years have achieved very good success buying uh, cash flow homes in these kind of markets. So I'm not saying all of these top 10 markets are my personal best. No. According to Realtor.com, uh, this is what they have researched so far. This is what they disclosed so far. But I have my personal favorite, and I'll tell you which one that we are in the market for a number of years now. So the top 10 is Hartford, Connecticut, El Paso, Texas, Louisville, Kentucky, Worcester, Massachusetts, Buffalo, upstate New York, Niagara Falls, Augusta, Richmond, Georgia, South Carolina area, Grand Rapids, Michigan, Columbia, South Carolina, and Chattanooga, Tennessee, and Toledo, Ohio. So I'm not going to go over all these 10 markets, but because we are a real estate investment club, we have a team in place at two of these locations, so that's good. In Buffalo, you may have seen our YouTube videos. We're talking about Buffalo cash flow homes for several years now. So Buffalo, we have a very great team set up there to help people to buy out of state, very low price cash flow homes. And also we have a team in Chattanooga, Tennessee that are selling great homes for $100,000, $150,000 taking cash flow. So with that in mind, let me go over this, not everything. I'm going to go over how Realtor.com use what kind of criteria are they using for this top 10 market, and their forecast for 2023 on these 10 markets. They will anticipate that this market will grow at least 5% appreciation for 2023, and so which is good. I mean, I'm going to go over the highlight. I don't know many of these areas. I mean, Hartford, Connecticut. I don't know anything about this particular market, but hey, they're a very cheap market. They'll still have a lot of demand of home buying, even at this moment. The prices, are pretty stable. El Paso, Texas is number 2 rank. I know about El Paso for many years. We have investors that bought in this market from time to time. By the way, like out of these top 10 markets, I believe 4, maybe 5 of them are located in a town where there's a military base, which is good. When you have a large military base located in these areas, the rental market is very, very strong. So that's a very good criteria for real estate investors to be successful long term, because the rental pool is very, very consistent when you have many soldiers that are renting. Myself, I'm retired from the U.S. Army, 20 years of service, believe it or not. So I retired 20 years ago, received a pension for all these years, for the past 20 years and beyond. So, I know about these markets that have a heavy concentration of the military bases. They are also doing well. Anyway, Louisville, Kentucky, yeah, in the Midwest, low home prices, very affordable. People can afford it. Massachusetts. I don't know anything about Massachusetts, Worcester. So we are, like I said, we have a team in place in Buffalo, Niagara Falls, New York, and hundreds of our real estate investors in the past few years have purchased very high cash flow properties. They have purchased multiple properties per investor because of home prices that they are so cheap, $70,000, $100,000. They could rent for $800 per month to $1,000 per month or more. So the cash flow and even appreciation has been pretty high in the past few years. And look at Buffalo. The appreciation projection is 6%, which is for 2023. So and the median price of a home in Buffalo area metro is only $239,000. So very stable market, very consistent rental market. So great for long-term investors, very high yield, very high cash flow, cash on cash return, capitalization rate, and so forth. Rank number 6 is Augusta, Georgia. There's a military base there. Fort Gordon, U.S. Army Fort Gordon. Yeah, again, I'm very much aware of this military-based type markets, very, very consistent, very stable markets, especially for real estate investors. Grand Rapids, Michigan, yeah, again, low price, good markets, good stable markets. Columbia, South Carolina, that's the Army base. Fort Jackson, U.S. Army Fort Jackson is a main basic training for Army soldiers for many, many years. I was not trained there. I took my basic training back in U.S. Army Fort Knox, Kentucky. Anyway, I forgot the city, Fort Knox. It's been so long. 40 years ago, I entered the Army. Wow, time flies. Where is Fort Knox located? Louisville, Kentucky, or anyway, time has passed me by. And Toledo, the last of the top 10. So most of these markets are in the Midwest. So, for years, people like make fun of the Midwest, blue collar, rust belt, this and that. But I think because of the skyrocketing home prices that are, prevalent in large part of the U.S., the West Coast or Northeast, large metros, home prices are so high. And even when people migrated to South and Southeast in Texas and Florida in past few years, that those out-of-state buyers and investors also have driven up prices so much, and all the locals in these markets that live in Florida and Texas and elsewhere in the South and Southeast, they're being priced out because for all those reasons. So I see, and I'm seeing trending. So that's why, I like to think myself, as a up and coming. I always get ahead of the market. That's I've been taking our investors to many different metro markets in the past 20 years. So I look at the suburban growth. I look at the path of growth in the suburbs of these metro areas, especially in the South and Southeast. But Midwest, once again, I truly see, and the data will support me down the road. I will share with you the data that will be forthcoming in the next 1 to 2 years, that people, I think there's a second level of migration, of epic migration, people moving not only from West Coast and Northeast, California, New York City, New Jersey into South and Southeast, but a lot of people moving, another second wave of migration going into going back to these basic stable markets in the Midwest, right? Areas like Tennessee and Alabama, upstate New York, and a few places in Ohio and Indiana and Illinois, Wisconsin and Tennessee. Where else? Anyway, so this Midwest market is bouncing back because people want to move back, migrate this area, because home prices, the median price of home price is probably like $200,000 or $300,000. So people can afford to buy a primary home to live there. And also, I see many real estate investors, many mom and pop real estate investors are moving or buying multiple homes, including our investors. We've been doing it for a long, long time. So this is not new to us. I've been onto this Midwest market. It's great for cash flow buyers. You can buy, investors, mom and pop investors. You can buy a home in Midwest like $70,000, single family home that rent for $1,000. You can buy a duplex for $100,000 that rent for like $1,400 on both sides, both doors. You can buy a fourplex for $200,000 to $250,000. The rent for whatever, a lot higher rent. $200,000 fourplex could rent for like $3,000 on all four doors. So the numbers really work as long as you surround yourself with a good team, good property management. So therefore, regardless of where you live, in any part of the country, you can potentially buy out-of-state turnkey single-family homes up to fourplex, 1 to 4 units, and do it very successfully. Once again, as long as you surround yourself with a team that understand where you're coming from, that can do a professional property management. They have rehab team, they have inspection team, They know the market very well. They've been doing it for a long time. So you can become a remote out-of-state turnkey investor, and you can scale your portfolio based on the financial resources do you have that you can systematically, one rental at a time, buy a portfolio of rental homes that cash flow with 25% down. And even though the mortgage rate is 6 to 7%, you can still cash flow very, very nicely and become a long-term buy and hold 10-year, at least buy and hold investor. So anyway, that's all I have. So again, my takeaway is Realtor.com, along with other websites that I have talked about recently. Redfin, talk about it a little bit, and CoreLogic, and the National Association of Realtors also talk about it on their 2023 housing forecast. They also mention that the secondary markets, such as the one I just discussed, at the Midwest area, is up and coming. Don't ridicule this kind of market. I know many people ridicule this kind of blue collar Rust Belt market for many, many years, but not me. So that's all I have to say. And hopefully, whether you're a primary home buyer, move back to these low cost markets you can afford to buy, even under this current interest rate environment and challenging economy that we are experiencing. But all you have to do is, whether you're a primary home buyer or investor, think long term, right? Long term, 10 years or more, you'll be fine. You will get over this fluctuation, this correction, whatever you want to call it, and just focus on your financial plan, focus on your long-term goal, and you'll be fine. Show discipline and block out the noise and just commit to your goal personally and professionally. All right. So if you receive a lot of value from this video, please smash the like button and subscribe to my YouTube channel. You will continue to receive on a weekly basis very cutting edge, real-time, exciting real estate information for primary home buyers and for real estate investors. Many of you are mom and pop investors try to get into this space as well. Thank you so much. And also subscribe to my email newsletter on my website at the bottom of this video. And you will receive weekly free newsletters about real estate investing. So great free education, and you can learn a lot. And who knows, you can become a very successful turnkey real estate investor yourself because the entry to buy this low cost home is not that much, right? It is very low cost relative to the benefits that you're going to receive over time to create generational wealth. All right, thank you so much. This is Si Wing Yi. Thanks for watching. I will see you on the next video. Have a nice day. Bye-bye.